If a criminal slipped into the middle of a payment between you and a customer, same names, same logo, same dollar amount, just a different bank account, who do you think the law would make pay for it? Most owners assume the bank reverses it, or that whoever clicked eats the loss. A small title company in Ohio found out the answer can be the business in the middle, you. In April 2021, a man named Connor Hoffman was buying a house in Marysville, Ohio, a $290,000 cash purchase. The buyer and the seller agreed to use the same small business to handle the money. Atlas Title Solutions, the escrow and title agent. Escrow is just the neutral middleman that holds and moves the funds at closing. Then the email arrived. It looked like it came from a closer at the title company. It had the right closing date, the right names, an exact replica of Atlas Title's own wire transfer form, logo and all. The only thing wrong with it was the one thing that mattered: the bank account number. It had been sent from an outside address by a fraudster no one could ever identify. This is what's called business email compromise. A criminal impersonating someone you trust to reroute a payment. No virus, no locked files, just a convincing email and a changed account number. Believing it was real, Hoffman wired the money. It landed in the criminal's account and it was gone. And this is not a rare glitch. In its 2025 report, released this past April, the FBI's Internet Crime Complaint Center logged $275 million in real estate wire fraud losses in a single year, and $3 billion more in business email compromise across nearly 25,000 complaints. Once the money is wired out, getting it back is the exception, not the rule. Here's the part every owner needs to sit with. Hoffman didn't just absorb the loss. He sued the title company, the small business in the middle, and an Ohio appeals court let the case go forward, even though there was no signed escrow contract, and even though it was the buyer who clicked. Because courts increasingly ask one question: which party was in the best position to prevent the fraud? Whoever that is can be made to pay, fault or no fault. If a payment runs through your business, that party can be you. So what actually stops this? One habit, and it costs nothing. Anytime bank details or wire instructions show up in an email, brand new ones, or a change to existing ones, you do not trust the email. You pick up the phone, you call the other side on a number you already had, never the number printed in the message, and you confirm the account out loud before a single dollar moves. Criminals run on urgency and closing day pressure. A 60-second phone call breaks the entire scheme. And if your business sends payment instructions to customers, get ahead of it. Tell them, in writing and up front, that your bank details will never change by email, and that they should call a known number to verify before paying. You're not only protecting them, you're protecting yourself from being the party a court later decides should have caught it. For most businesses, this is a policy you write once, a line in your emails and your contracts, not a system you buy. Atlas Title was a normal small business doing normal closings. One spoofed email turned it into a defendant. So go back to where we started. If a criminal inserted a fake payment into the middle of your business tomorrow, is there a single phone call anywhere in your process that would catch it? If you're not certain, that's the thing to fix this week. Breach Brief breaks down one real attack and what it actually costs every week. Subscribe and stay a step ahead of the people who'd love to get in the middle of your next payment. This is general education, not legal or financial advice.